G'day. Welcome back to another episode of Euro Mining News. Today we're talking Strickland Metals, which is an ASX listed gold explorer, just over 200 mil market cap, and they're primarily chasing gold in Western Australia. Now their main project sits just to the east of Jundee, which is one of Northern Star's main assets. And Northern Star's a multi-billion-dollar huge gold producer in Australia and also Alaska. And basically they pump out about 300,000 ounces from Jundee, and they've got their own mill. Strickland owns ground just next door. So Strickland sold a bunch of this ground. It was called the Millrose asset to Northern Star last year for $60 million or $61 million. And basically since then, everyone's been watching Strickland, wondering what they're going to do with the cash, where they're going to buy. I was expecting Australia, or at least to further their current assets, but they've decided to jump all the way across to the EU and get into a bit of Serbian gold, copper, zinc. So let's jump into their announcement. So if we look at this, acquisition of a 5 million ounce gold equivalent, so that's important, Rogozna gold project. So basically it is JORC compliant, this initial mineral resource. However, it's based off a gold equivalent. So that's a mixture of the gold, copper, zinc, and a couple of other bits and pieces. So obviously with gold equivalents, you're mixing a whole bunch of stuff in to create one main commodity that you can base everything off of, rather than trying to value a project based across multiple commodities. So it always becomes also a lot more complicated at the processing side of things, because you can't use the same process to get gold out as you would to get copper and zinc out. And if you've got copper oxides, they're going to mess with your cyanide solution and they're going to stuff everything up. So there's a lot of metallurgy that has to go into this before I would be comfortable going ahead with it. However, it's a monster deposit, so we'll jump into it. They're planning on jumping straight into a 60,000 metre campaign in 2025. Total cost is approximately 37 million, and it's mostly going to be through the issue of Strickland shares. So this is going to dilute their share price in the short term. However, they're picking up a big asset, and they're going to keep that cash balance so they can put that into drilling without raising money. Now, the company's recently had a board change, so potentially the old managing director wasn't on board with this change to Serbia, and that's why it's changed. However, Paul, I'm not going to try his last name, has stepped in, with also Dr. John Hronsky coming in as non-executive director. And they've both got donkey's years experience in exploration, so I think it's a pretty good management team. They're still planning on drilling out their assets in Western Australia, and they've said that they're in a good cash and, a good financial position, basically, because they got a heap of shares in Northern Star, which was part of that Millrose sale deal. Plus a bunch of cash, which they also got from them. Now, this Rogozna project in Serbia basically comprises 4 exploration licenses covering approximately 184 square Ks in the Southern Republic of Serbia. Now, they're gonna pay shares instead of cash mostly, so it's always important to look at the percentage of shares outstanding that's going to go to this company that's selling. So it ends up being around 19.4% of the company after they issue these shares. That's important because it's going to make them a major shareholder, which is going to allow them to have quite a lot of sway in voting as to how they go about developing this asset. Another interesting thing I saw from this comment, this is from the outgoing managing director, Andrew Bray. He said, in our view, the project has potential to grow into one of the largest undeveloped gold deposits globally with a bunch of copper and zinc, making it precisely the type of asset that will attract very compelling valuations as the project advances. Now, when I read this, I don't necessarily think that these guys are going to develop it. This sounds like a drill it out, shore it up, sell it to a bigger fish. And because of their already their relationship with Northern, and additionally, there's a bunch of other global majors that have ground in the area. So BHP, Rio, Vale. So it is a well-established mining jurisdiction. So jump down into it. Now, the biggest problem I have when an announcement comes out says 5 million ounces of gold, but no, and this many tons, so many tons. It always makes me go, why aren't they telling you the grade? What's going on here? So 130 million tons, massive, at a 1.1 gram per ton gold equivalent. All right, sounds all right. What are the grades sitting at? Unfortunately, the gold is down at 0.63 grams per ton. So that's just above economic for an open pit scenario. For an underground stoping scenario, it's not gonna cut it unless they are just massive, like bulk mining. So it's only got 0.1% copper, which isn't going to cut it. 5 grams per ton silver, 0.2% lead, 0.3% zinc. So it's very low grade. I would call this extremely low grade, but it's got the tons. So the way that they go into producing this gold equivalent is, if I scroll down here, the formula used for gold equivalent is gold grams per ton plus 1.78 times the copper percentage plus 0.014 times the silver grams per ton plus 0.391 times the lead percentage plus 0.533 times the zinc percentage. This gold equivalent is an absolute mixing pot of everything. That's why I generally don't like gold equivalents. However, you have to be able to summarize the project into a single sum, basically for valuation purposes. So I understand they have to do this. However, with a gold equivalent, I would be expecting a lot higher than 1.1 grams per ton. I'd be expecting that just from the gold. So their optimal stope shapes are at 0.7 grams per ton gold equivalent cutoff grades, and that this has been done by external consultants. Now they've used a gold price of $2,000 per ounce and a 10,000 per ton copper price. Now the copper price is currently sitting at about 9,000, and the nice angle. Here's your initial exploration program spanning for the next 12 to 18 months, about 60,000 meters of diamond drilling. Now here we get into the terms of the acquisition. 750 grand cash was paid as an exclusivity fee. And then here's your massive chunk of shares that were transferred, which, yeah, like we said before, 19.4% of the company. The consideration amount equates to around about $34 million if you look at the share price and how many shares were transferred. So I don't quite understand why they paid for this in shares and not cash, because they got 60 million on hand, but they've decided to do it this way, I guess, so that they're going to be so cashed up so they can just get straight into drilling all those meters. A couple of extra bits that they're assuming 375 grand worth of liabilities that the sellers, Batuta Holdings, has, plus just some other bits that they have to pay. Management, like I said before, they're both very experienced. Now, about Serbia, the government royalty is about 5% net smelter royalty. So this actually isn't too bad. I was expecting it to be worse. In Australia, we've got kind of between 2.5% and 7.5%, depending on what commodity you're getting out, but gold in general is sitting around 2.5%. So this is 5%, but that's definitely it's not out of the world like crazy numbers. Now the last bit that I thought was interesting was that the cutoff grades for estimation, so your modelling, was set above 0.1 grams per ton gold equivalent. So not gold grades. This means gold grades could be down to kind of like 0.07 to get a 1 gram per ton gold equivalent. So I think the size of this project, once they get it into reserves, an indicated category, it's going to shrink a little bit. However, when you've got 5 million ounces to play with, it doesn't matter too much. Extrapolation from drill holes is 75 meters and sometimes up to 115 meters. And again, here they've used gold grades of just above 0.1 grams per ton for their cutoff. So that's about all for today. So cheers for tuning in, and it'll be very interesting to see what happens with Strickland from here on in. See you later.